Ladies and gentlemen, we now move on to our last session for the day, which is a panel discussion on call to action on climate financing. And to moderate the session, may I please invite Shri Ashish Kulkarni, Partner and Associate Director, BCG. I take this opportunity to invite our panel of speakers, Shri Manish Kumar, Head, ECG and CSR, ICICI Bank, Ms. Kritika Jerome, Shakti Sustainable Energy Foundation, Ms. Shobna Chawla, ED, Standard Chartered Bank. Okay, may I request Shri Ashish Kulkarni to please start with the discussion now. Over to you, sir.
Hello, everyone, and first of all, thanks to the organizers to have invited me for this session and all the esteemed panelists over here. It's the last panel session, and obviously since morning we've been deliberating as a panel on what else we could speak and what else we could take forward to this, also for the forum and also for the nation on the whole. So I think we finally arrived at certain ideas, and all we want to do is to discuss on the solutions and what could happen, and what there are bits and parts of which have been have had success across the globe, and we could probably bring them down to nuts and bolts over here so that the climate action can happen on the ground. And today, frankly speaking, bringing a human angle to it, we are all in this together. Climate change is real, and it affects everyone around us. It affects the infrastructure companies, similarly to financial financial banks and other institutions, and all of us individually as well. And hence, I think bringing that lens of how it needs to happen, and what is that we can actually tell the government, and also give a proposal to the government on what needs to happen, is something that we are aiming at it. And all of this, we are planning to do it in 20-25 minutes. So the clock starts, and I think I'd now invite Kritika to basically speak on her views on what's happening across the states, and bring to a stage where what are the kind of facilities, or what are the kind of platforms you're looking at when you're scanning the entire India as on the whole, as Shakti.
So I'll keep aside the financial sector regulation. A lot has been spoken, and my panelists would be better placed to speak on that. But in terms of states, one thing is that there is a lot of momentum in understanding what they can do about climate. So within the past 3 to 4 years, we suddenly see a lot of interest in transition plans, in understanding how they can transition the state economy, and also unlocking new sources of financing, because that is a key bottleneck for a lot of states. And one of the tools that has come into play is green budgeting. And this is something that we have supported a few states with. But that being said, I'll add a caveat that right now it's an ex-post exercise where you're tagging the expenditure with what would qualify as climate or green, or even with SDGs. Ideally, what should happen is that it becomes an ex-ante and a planning exercise where it feeds into your state planning process. And on top of that, if we can integrate it with modeling, and which is what we would try to do, and which is the ideal state that we want to go to, where we on one hand model how the state economy transition should take place, what are the estimated investment requirements, where can we source this capital from, feed this into your green budgeting exercise, understand what amount of public expenditure is available, and how can you use that to catalyze and leverage more investments. Because as we all know, there is limited public resources, and a lot of it has to go to adaptation as well, which has no business case as of now, or limited business case. So this is something that we are supporting actively across states. On the other hand, there are a few models that I would like to highlight. For example, Tamil Nadu has come up with Tamil Nadu Green Company, Green Climate Company, which has now become the Green Climate Fund, which would be operated by the Tamil Nadu Infrastructure Development Fund manager, right? So these are active ways of creating a special purpose vehicle where you can blend finance more effectively, leverage public capital, get DFI or philanthropic capital even, and create a holistic platform with technical assistance as well, which would then feed into the 3 missions that Tamil Nadu has announced. So that's one great example. And the third thing and the last thing that I would like to highlight is there was a lot of talk of project pipelining as well. But there is definite lack of understanding of what these project pipelines could be. So one of the initiatives that we are trying to look at is also to create a PPP focused facility for cities where we can get expertise and integrate it with the Ministry of Housing and Urban Affairs as well, and really get the pipeline projects in place, help with projectization of it, and then support it through the bid process management. So these are some examples that we could highlight.
No, thanks. Very valuable inputs, Kritika. And I think the ex-ante part of the aspect, it's not only on the modeling and the budgeting part, but also on the resource allocation, as well as Mr. Nair also touched upon, that we need to do the planning exercise across all the facets, across all action points. And that's one point. And secondly, I think, as rightly said, the platforms which you, and the models which you, just spoke about in Tamil Nadu is something that we could look at having that in all the states, looking at each state and what is the kind of budgets they have, and then how to leverage it, having blended finance and all the aspects of the right kind of instruments, and where the risk-adjusted returns are provided to all those who commit to that particular platform is very important. And I would like to bring in here, Manish, to understand from your perspective, what do you think that what's not happening as of now, and what is that we need to do or create so that we can take that proposal out there and see if there can be a change in the whole idea of climate action and how it can be funded.
Good evening, everyone, and thank you, IBA, for giving me this opportunity. I think I will wear the hat of CSR for this particular discussion. And we are, the topic today is unlocking climate finance. There is already a regulatory framework in India which actually compels the profitable companies to spend a minimum amount towards corporate social responsible activities. And under the Companies Act, certain activities are already predefined. If we look at some of them, they are around healthcare, they are around environment and ecology, they are about supporting livelihoods. If we reflect back, these all map back to certain UN SDGs. They will also map back to meeting certain objectives that an organization or the country needs to achieve under their ESG journey. So why can't we look at some kind of a platform? We have crowdfunding platforms available. Why can't organizations in India come together, set up a common platform? All of us are working in the same direction. What we have to do is collectively achieve that money becomes accessible for the same objective. We were talking about how can we channelize financing for some of these activities. This becomes a good source for financing. We also need to understand and not forget that we are still 15% of our GDP is still supported or dependent on agriculture. That sector is currently also one of the large sectors responsible for emissions. Again, if I marry the two, a lot of the CSR funds which are getting currently channelized at the grassroots level can be used for better, say, climate smart agriculture practices when we are trying to promote use of organic fertilizers or other less use of fertilizers but organic means of farming. We can actually support livelihood at that grassroots level. We can support societal development. We can support better sanitation and therefore also upliftment of that particular society. So I think we need to somehow also not miss that opportunity of capital which is available. Each organization is doing its bit to achieve that CSR objective. At the end of it, there is a lot of impact assessment that needs to be done. Again, that is currently being done in isolation. So if we do it collectively, we can achieve the same objective. It will bring down the cost of doing those activities. I think that is one avenue which we can look at for unlocking climate finance.
Yeah, thanks Manish. And just to bring in the aspect of how these platforms can take in equity debt and mezzanine debt and also CSR funds and also the MDBs can come in. And before this panel, we did have one of the speakers also mentioning about the role of government. And that's where I would like to bring in Shobna. And, from a Stancy point of view, and also what you've seen globally, how do you think that, a solution-oriented approach can be brought about, and which kind of model is that we need to take up in India to drive climate action on the ground? What are your views on that?
Thanks, Ashish. Good evening, everyone. Pleasure to be here. Thanks, IBA, for inviting me to be on this panel. I think throughout the day, I think everybody's talked about how much money is required for India to transition, and anywhere from 2.5% to GDP to 4%, there have been numbers which have been thrown about. The fact is that the scale of capital that is required to transition is quite significant, and as a country we will have to tap into all possible resources to essentially to be able to drive capital for these requirements. There was also a lot of talk at COP about developed economies actually coming in and supporting the transition for developing economies. And the question of commitments that were made hasn't actually translated materially. And I think they came out with a loss and damage fund which was pretty insignificant. If I recollect, it's about $600 or $700 million, which is really nothing to go by. But what I want to kind of also share here is what, as an international bank, some of the experience we've seen in some of the other markets, especially the developing markets, and what is it that they are doing to kind of address this issue around transition. So all of you are familiar, on the sidelines of G20, there was this Just Energy Transition Partnership, JETP as it's called, which was kicked off. And under that, interestingly, South Africa, Indonesia, and Vietnam, 3 countries have actually managed to kind of secure funding to take care of their own energy transition requirements. So if I take Indonesia, for example, which was announced last year when Indonesia essentially handed over the G20 presidency to India, they raised about $20 billion to support their renewable target aspirations, which was part of the NDCs. And they got commitments from the US government. There were a whole lot of MDBs who were involved. And basically the government essentially also bringing in and driving private sector participation. So banks like us and a whole lot of other members, international banks actually stepped in to kind of try and support financing this transition. This is something, I think from India's standpoint, we should be taking a leaf out of this page to try and see how at a government level we can actually mobilize private capital, philanthropic capital, I think the pool of CSR that Manish talked about, and thereon kind of catalyzing private capital to come in to support some of our climate finance requirements. And one other point I want to add, going back to, the point around how bulk of the talk around financing in India is focusing around mitigation. Right, adaptation is another big area, and a fair amount of investment is actually required. So, adaptation is real. I mean, in terms of what we are seeing in terms of climate event impacts, and I remember a presentation earlier this afternoon which actually talked about extreme weather events and the impact on the economy. So clearly, that should also be, so potentially this corpus should be looking at driving both mitigation and adaptation, because adaptation, by the nature of it, you will not get private sector investment into it unless there is serious push from the government side in terms of their own commitments, whether it's capital or putting in place suitable structures for financing such stuff.
A very important point Shobna made, and I think from the perspective of putting the buck on the table from the government side is a must. And even if it is, I think we all have platforms, we all have institutions, we do have the capabilities and the capacities. I think it's just about getting there and having those clearly earmarked budgets as earmarked funds which can take care of the adaptation. And we were also speaking earlier during the day that if every investment is taken into consideration and there is a risk element of climate to every infrastructure investment that is going into it, then the adaptation related funding and the adaptation related aspects become more prominent and more essential as of today to protect all the investment that has gone into the country as of today. So hence, I think the two-way of looking at it is basically to get the government to commit to hard cash, and also the fact that there is a commitment from all the private and the banks and the public sector and also the companies to bring in that CSR and other funds to blend it along so that the risks are adjusted to all those who participate. I would like to we do have another exactly 7 minutes. I just wanted to understand from the panel if there are any burning aspects that could again get to a point wherein we see that there could be any further injection of any aspect with regards to MDBs that need any enhancement or any reform. We are all talking about it in the G20 forums, but what exactly is that we could also target the MDBs to help us in this kind of situation? Is there any ideas or any forthcoming proposals which we could take it to the MDBs or any other stakeholder who are participating in it? So whether government or whether MDBs or whether private sector banks or whether companies. So if there is one or two ideas which you could provide for the forum, then we could take it up to them.
I think the CGM of RBI, I think, put it pretty in a very concise manner, right? I think to attract capital, especially international capital, I think the entire framework locally around whether it's your own disclosures, whether it's data, and I think we talked a lot about data earlier today in terms of monitoring, etc. I think some of those enablers are extremely important and need to be in place for any international investor, whether it's an MDB, whether it's government to government, whether it is any philanthropic or impact investment capital coming in from overseas. I think for any of them to come in and be comfortable to come in and lend or invest, I think think that is extremely important. I think we made a start towards that, and I think that is to basically give the comfort that, you know, that let's say, for example, if you were to look at any kind of project finance, you know, environmental, social risks around the project have been covered, you know, suitable diligence has been done, you know, on that aspect, whether the climate risk aspect has actually been considered. I think some of these are, I would say, hygiene factors, which are really required to kind of facilitate any flow of capital. And that's the reality that we are living in today.
I'll add something. I think I'll take the other side because, you know, Niranjan also alluded to it. I also, you know, get on investor calls and engage with MDBs. One thing that we need to send the message across, and the MDBs also need to appreciate, that whatever frameworks and regulations that are being developed in India, there is a lot of influence from the international frameworks. We are actually not ignoring that aspect. So they need to understand that even if they are, you know, supporting developing economies, are they broadly meeting those, you know, objectives which have been laid out, you know, globally? Answer to it mostly is yes. And therefore they need to see what kind of tweaking India has done and whether that, you know, materially materially adversely impacts their own objective. If it doesn't, then I think it will be, you know, good handshake.
Yes, I think that's also very important, and the one idea which you said on bringing in more robust data monitoring and also on the transparency bit, I think we all need to know where the money goes. I think that's very important, and bringing in that kind of transparency. These are enablers, and I think that is something that will help in you know, unlocking more of climate finance, definitely. Kritika, any last comments from your end?
I think I want to go a step further and say that due diligence is a hygiene factor, but we also probably need to tie this with incentives. For example, if you're looking at climate resilient investments, and you're looking at infrastructure investments, there could be some basis point reduction for climate resilience that is built in, which allows you to actually incentivize more climate resilient infrastructure project developers that come in. So just to add on.
Great.
On the incentivization part, because that actually pinches the bankers the most. So one way to look at things is the existing infrastructure assets, and I think we were talking on the sidelines about this. Those need to be protected. They are subjected to physical risks. They are subjected to climate risks. Do we really need to incentivize, you know, the bankers or the corporates to protect the existing infrastructure assets? I don't think they need to be done that way. I think we know that these risks are there. We need to protect them. One is, you know, for continued operation. Second is from a lender's perspective to, you know, really have a collateral which will, you know, live the term of the loan. So we should also look at it from that perspective, and that financing, irrespective of ESG, you know, framework, etc., should be easier to do.
Sure, I think both from a perspective of the due diligence, I think the incentive, what Kritika was mentioning, is basically from a perspective that it needs to be thorough. I think it came from that angle, but I think we all agree that subsidies and incentives going into wrong direction is not something that we want to take forward. And coming to the end of this very, very rapid fire session, I think just to highlight three or four things, what we can actually take forward as our proposal of this particular panel to the government is also to understand that, you know, there are platforms enabling them with the right kind of you know, transparency as well as data for getting climate action on the ground, and mitigation, as we all know, is fairly you know, fairly at a stage where it has become mainstream, and there are PPP structures which has been talked during the day, and also viability gap funding. These are the kind of instruments that can be brought into for mitigation. Adaptation, largely there has to be a larger role played by the government bringing in the funds for that in order to protect all the infrastructure financing which has happened. And I think there is a role for MDBs to come in the form of guarantee structures, in the form of debt, in the form of low cost loans, to in order to get the climate action right at the right speed, because this is also, we are also fighting against time. That's something. And on resilience, I think, and the transition, especially with regards to energy transition and meeting the Paris Agreement goals, the companies need to pitch in and bring their own funding to get that streamlined, which is beneficial and profitable for themselves, but also helping the country at large. I think from a perspective of coverage, we've covered quite a bit on all aspects, and from the aspect of subnational level action which needs to happen on climate, I think the institutional structures need to be robust, giving sufficient cushion to all the stakeholders who are coming in, whether it is the private sector banks or international banks or the MDBs, or the government needs to definitely have its first step into making it happen. And this is something that we would like to also see, that in the near coming future, that everyone comes and does their bit in unlocking this entire unlocking, or solving this whole puzzle of financing for climate action. Thank you very much.
Thank you for the engrossing discussions on the topic. May I request you to wait back for a group photo, please? And Chandrasekhar ji, may I request you to come forward and present the memento to the panelists and the moderator. Yeah, just 1 minute, ma'am. Yeah, we like this. Pooja. Thank you. Thank you.